Welcome, world. Welcome to the first episode. This is the initial jump off for the Stocks is Talking podcast with Ibn Getz. I'm your co-host, Ibn. My friends call me Ib. That means you, the listeners, you call me Ib. And my co-host, Getz, is in the building. Please say what's up to the people, Getz.
What's going on? How you doing?
I'm doing good, man. I'm doing good. How you feeling? Let me first jump off and let everybody know what this podcast is all about. We're here, two young black men who love the stock market. We're into making money in stocks and strategizing, understanding new concepts, techniques, the hot stocks, the dividend stocks, whatever, equities market, Forex. We're interested in it all. Now we want to do a podcast. This is us. The Stocks is Talking with podcast with Ibn Getz. This is what we're about. And first off, Getz, I wanted to start with, why do we get into it? How do we get into it? And why do we do it? For me, I've been into stocks since, I think I helped my father get money on his first stock when I was 16. He had kind of put me up on game. I did a little research, said, hey, check out this stock. He made some money and ended up giving me some cash from his stock that he made off of my suggestion. So that was my initial taste of the market and the fact that I can actually do some research, pick a stock, buy it, and sell it for more than what I paid for it. That's how I got into it. And, you know, I'm 34 now, and I still dibble and dabble, and I love the market. Getz, how did you get into it? What made you get into it? Why are you on this podcast?
For me, it was, I think somebody at work initially, they got me into it and dibbled and dabbled a little bit. Nothing but losses.
Okay.
And then got up with you and your pops and, you know, got schooled a little bit. Okay. And I made some money by accident one day.
Money by accident on an option. Hold up, because you talking about options already. I want the people to know, if you don't know what an option is, we're going to get into it. Right now, we're just talking, letting you understand who we are. Options, You don't even understand, Getz. That's an advanced level of trading. You just go out there very casually, very nonchalant, but that's what we're here for. We're here to talk stocks. You jumping out there early, quickly, but I want to let the people know we're going to get into options. You'll understand what that's all about if you stick with Stocks is Talking with Ibn Getz. Please continue. Continue.
So I made a little money by accident on an options trade one day while I was sitting at work.
Okay.
And so that got me back into it because I was like, I'm done. I don't want nothing to do with this.
Really? So do you remember what stock it was? What stock had you, what gave you that first little taste of money in the market?
It was Bank of America. Okay. And it was, I want to say it was about 5 years ago. I think it had something to do with Trump. Before he got in. Yeah. It was when that was just starting the whole Trump trade hype. I opened up an account one day that I hadn't looked at in forever, probably a few years, and it was like $1 sitting in it.
Okay.
I see the $100.
Everybody out there who doesn't know what a buck is, it's $100. Please understand, streets is talking. Stocks is talking. That's where it comes from. We two black men that know a little slang vernacular that we bring to the stocks game. So if you don't know, a buck is $100. He looked at his stock market account and saw another $1 in there. Just keep flowing with us. You'll understand the lingo. Yeah. Please continue.
Yeah. So I saw that in there, and I threw some money on Bank of America, BAC, and I let it ride. Forgot about it. Looked at it the next day. I think I was riding around at work and look at my account, and I'm up like 500. So I'm like, okay, I'm gonna take that. So
okay.
So I take my money out, but now it got me thinking. Well, if I could do that in a day, what else can?
What else can you do?
Yeah, and it just grew from there.
There you go. And the rest is history. And now we're doing a podcast to just kind of give the listeners some game on the markets. Cut gets, and I'm gonna put out there. We're not gonna dance around it. We cousins, we family,
Mm-hmm.
not necessarily blood cousins, but we family. So we doing a podcast together because we have these talks on a consistent basis. Because 5 a.m., 6 a.m. What'd you say?
Almost on a daily.
On a daily. So we're bringing it to the podcast platform for all the listeners out there, whether you're in Australia, you might not be yet, but one day you will be. Compton, Baltimore, Jersey, Alaska, Wyoming, wherever you are out there. Now we're going to bring you into our personal convos on the markets. So you talked about options. What does that mean? Because a lot of people are listening. We're just going to get right into it. We don't do an outline on the Stocks is Talking podcast. We just flow and have some good engaging convo. What is the option from your perspective? I could jump in, say a little bit from my perspective of what an option is and how can you make money off of it. But what's your thoughts on that?
I mean, to put it in the simplest terms, the options is you're placing a bet. You're betting whether the market's going up or down, or whether individual stocks going up or down. That's the simplest way to put it. You know, you choose your strike price, your price that you were expecting, you know, or your target price that you're expecting the stock to go to, and you place your bet. And
so let's give an example. Let's just stop on that real quick and give an example. You have a strike price. You want to make a bet that is going to that price. What does that look like? If the stock is, let's say you got Apple at $50, what kind of potential options trades would you look at making in terms of the strike price, how you make the buy? What does that look like? Apple's trading at $49 right now. What are you thinking as a trader?
That'd be amazing. But
one, why would that be amazing?
That'd be amazing. Just because looking at what the price is now, you know, especially after the split and everything like that.
After the split, what is that?
Yeah, I mean, they did the 5-for-1 split, I think it was. So they were I think they were at 500. They did the 5-for-1 split, so they went down to $100. Right now, last I checked, they're 121, which is down.
Okay.
Which is still a lovely price. You know, I know you got in early.
Yeah, I've got in early, very early.
Yeah, you got in super early.
Yeah.
You know, but if you got a stock like Apple, it's at $49. I mean, there's a lot that goes into it. Mm-hmm. But you know, you're looking at your time frames.
Okay.
How far do you want to go out? Are we talking a month? Are we talking a year? You know, because you could if you're talking.
So let me just take a quick pause for what we're talking about when we say go far out. With options, if you don't know, you place your bet as gets mentioned, but you place your bet and it has an expiration on it. So right now, today is Sunday, March 28th. Friday is April 1st, I believe. So you can purchase an options gamble, but that option that bet you placed will expire on Friday. Meaning you have to buy and get out of it by Friday or all your money dissolves.
Right.
Plain and simple. If April 1st comes on Friday and you haven't either sold it or extended that option, and that's whole next level we'll get to way into the podcast weeks, months from now, you have to sell it. So the point is that option has an expiration date. So when he says goes far out, he's saying the expiration date is farther out. So it's maybe April 15th or April 28th or August 2021. So you have a few months. So please continue with, so if Apple is at $49, please continue.
Yeah, it's at $49. I mean, we could say Apple's at $49. I mean, we don't want to get too deep with it. I mean, but because you got your in the money, out the money, stuff like that. You know what I'm saying? Which I don't think we should get into to start off with. But if it's at 49 and we're going through a market like we're going through right now and Apple's down, but you see the potential that in the next couple of weeks Apple's going to go to 60 or, you know, a 70. Well, then you could say, you know, all right, I'm gonna buy at a $60 strike, you know, which is out of the money. It's going to cost you a little less. Your premium that you pay is going to be lower.
So $60 strike, meaning that's your target that you're placing
That's
your
your
bet
target.
on.
Mm-hmm.
That it's going to hit $60.
Right. So
Okay.
So if you're going for a $60 strike, if that's your target, when you go 2 weeks out, on a weekly contract, or you actually, at this point, today's date, maybe you go on a monthly contract, so you get the middle of April.
Okay.
Now,
middle of April, people, we're saying, you know what? Put your money on Apple. It's going up. I'm betting it's going to 60. Mark it in. Give me a little bit on Apple going up. That's pretty much what you're saying when you say $60 strike in a couple weeks. In a couple weeks, it's going to hit 60, and I'm going to make money as it continues to go up towards 60. Because right now it's at 49.
Right, and obviously your risk reward on an option is way better than it is on a stock. I don't know if you want to go into that.
Well, what do you mean when you say risk reward? Explain to the mean by that.
Well, all it is that your stock is at $49. It goes to 60. All right. You made $11 a share, right? Mm-hmm. You have 10 shares. You made $110.
Right.
Well, if you went and bought one contract, depending on the premium, which is what you're paying for, it's one contract is 100 shares. So whatever the price is, you times it by 100. So let's say it's $5, which would be 500.
Right.
You put up that 500,
and now you have 100 shares worth of the company.
You have 100 shares. You have the potential to have 100 shares of the company.
The potential to have 100 shares.
Yeah, because you don't actually own those shares yet unless you exercise that option.
Because right now you have an option to buy it or the option to sell it.
Right.
And you have the expiration date to determine what you're going to do. Are you going to exercise your option and now buy it, or are you going to now sell that option?
Right.
Okay.
So let's say, if we're not exercising that option, if we're just going to hold the contract and build on that premium, if we started, it cost us $500 in the beginning. By the time it goes to 60, especially if the market is like right now and the price is depressed. So we're buying a red day. The market's down.
Okay.
It's
a red day means the market's down, people. If you see red, that means people are selling, which means you should be buying. Quick tip from the Stocks is Talking podcast. This is the first one, Gets. This is the first we want to give them. Quick tip: buy on the dip, sell at the tip. Mark it down, people. You're getting big tips from Gets and Ib. That's the first one. Buy on the dip, sell at the tip. Go for it.
Like they say, you be fearful when others are greedy. Be greedy when others are fearful.
Ooh.
Right?
Ooh, give that to him again.
Be greedy when others are fearful. Be fearful when others are greedy.
Ooh.
So when everybody else, when you have all this euphoria in the market and everybody's piling in, they're being greedy. That's when you should be stepping back. But when the market is falling and everyone is fearful and they're selling everything because they just don't know any better, that's when you should be greedy. That's when you should have your money to the side. That's when you should be, every time as those shares drop and those people want to sell, you need to be that point of liquidity. You need to be that, you come in and you're just like, hey, you know what? I'll take those shares off your hand. If you believe in the stock, if you believe in the company, then why wouldn't you? If they're in, if they're trying to sell something to you for well below what you believe its intrinsic value is, then why wouldn't you take it?
Why wouldn't you?
Right.
But let me just tell the people why they wouldn't, because they don't know any better. They're not educated on you buy on the dip, you sell on the tip, which is why the Stocks is Talking podcast with Ibn Gets. We're here to kind of help people that may not know. This is stock knowledge for the common man, for the common people. We're out here
Right.
talking in a common language for everybody about a market that only a 1% is really making money from. But we're bringing it to you in our own language so you can understand this is not just for Wall Street, this is for everybody if you have the education. So when you say,
Right.
why wouldn't people jump in at this price point? Because they don't know any better. But please
They
follow
don't.
us, subscribe to us, share this podcast with your people, and I promise you, you'll all understand. Buy on the tip, sell on the tip. Please keep going for them, Guts.
I mean, you need to jump in here at some point. I mean, this is
I want to talk
you
about
know.
I want to talk about looking into stocks for the future and give a quick story.
Okay.
Plug Power. Do you remember Plug Power?
Oh man.
Are you familiar
Yeah, I
with Plug
remember.
Power?
Yeah.
Okay.
Preach.
So, about, what was that, 3 years ago? 3 years ago, maybe. Maybe it was 2.5, 3 years ago. Plug Power, this fuel cell energy company, they were at
Yep.
about hydrogen fuel. They had warehouse contracts with Walmart, which really caught my attention back then. They were selling.
Yeah, and they had the Amazon deal. They did the Amazon deal.
They had the Amazon deal. They were trading at what, $2 and some change?
Something like that. Yeah.
And we were having our weekly small cap conversation, just talking small caps, what's doing what, and somehow Plug Power got into the mix. And you and Ace, you all downplayed it. Oh, plug. I don't see it. The valuation's not there. They're not making any money. They're not going to turn a profit. I wouldn't mess with them. I said, okay, I'll buy a couple shares. Let's just see what happens. At $2.20, I'll just check them out. So I buy them. They kind of fluctuate between $2.30, $2.50. They're not doing too much, but I hold. There are few sales. They have a contract with Walmart and Amazon. That seems positive, right? So I'll put them off the strength of that. The fundamental aspect of having that kind of business and clientele tells me you're going to be around for the future, because Amazon's not going anywhere. Walmart's been around for years, right? So if you're doing business in a company, in an industry that's a little bit new, a little bit nuanced, hydrogen fuel cells, and you have a contract with this company, okay, I'll mess with you. So I had 200 shares. 200 shares of this company, and they kind of teetered back and forth. Are you in a position to look up what Plug is now? And as you're looking up what Plug is now, let me tell the people what I proceeded to do. And this is another lesson. If you have a hunch or an idea about a stock and you feel like the future for them looks bright and others don't see it, trust your gut, trust your energy, and play it off that. Because I felt it would be a good stock, and I purchased it and ended up selling Plug at about maybe $3 or $4. I sold them. I kept maybe 5 to 10 shares of them. But I thought, you know what? I took some profit off the table. They went up to $4 or $5. I can't be mad at that, right, Getz? Why would I be upset? My people are telling me, hey, they don't like it. It's not going to do anything. It's just a facade. Right now, it's just a trend. Get out while you can if you made profit. Trust me, you're going to hold too long. You're being greedy. You need to take that profit. You're making a little bit of money. Jump out, jump out, jump out. Even my father, jump out. I don't know about Plug. Jump out, jump out. Let me know when you're close to having that number for what Plug is at the moment.
I got it. I got it right now.
Okay.
Yeah, I got it. Plug is at $34.02 right now.
Hold on. Say that again.
I'm trying to get $34.02 right now.
Okay, $32.02.
Yeah.
Okay.
But hold on, because I'm gonna give you the give me a second. I'm gonna give you the 52-week high.
Oh, the 52-week high. So let's start for the people and let you all know this is a nugget. If you're just getting into stocks, you're curious to how do I even make a potential good move in purchasing a stock, jumping out there. What do I look for? You look for a 52-week high. What has that company done within the 52 time frame? What's the high? What's the low? Because here's what you're looking for.
So the low
is